And I don't need to be an expert at everything, but I certainly, and I told my girlfriend today, I was like, I'm not an expert at shit, but I am an expert at finding experts. That's for sure. And I think that's where the best business people that I've ever seen, mentors of mine, 9-figure guys, 10-figure guys, that's where they nailed it.
Welcome back to Real Investing, where we talk about real investing for the everyday investor. Tim Harridge here with my buddy
Ryan Harper.
And our special guest, Will Denis with a one N.
One N.
With one N. He's Cuban, and apparently, does that have, well, you told me to talk about it.
Yeah.
Does that have anything to do with the one N? I'm trying to figure this out.
Yeah, so the one N it's Denis, like Denis, from Spain. My dad was from Spain, so it's just how it's pronounced. Yeah.
I love Spain. Have you been to Spain?
Yeah.
Oh, gosh.
We're going back.
So what do you do in this business of real estate investing?
So 2017, I got started as a wholesaler, and then I scaled that up, and now I created something called reverse flipping, which is a new strategy. Some parts new, some parts old. It's just the way that it's done and the way that it's executed is completely revolutionary. We bought a loss mitigation firm somewhere in that time, which we can get into. And basically, we turn dead leads into deeds. So that's our slogan.
Well, let's talk about that later.
Yeah.
You're in South Florida.
Yep.
Which I learned the difference between Miami and South Florida last night.
Something happened recently there.
Yeah, that was West Florida, not South Florida.
Is that the same thing?
No,
it's West Coast. Yeah.
These guys.
It's a peninsula.
We spent a lot of time on this last night.
Okay.
I'm always curious because I go around these masterminds events and people talk about how bad the market is or how hard it's been to adjust. We'll talk about how you pivoted, but can you maybe give me some grassroots, ground level information? How is the real estate market?
In South Florida?
Yeah.
I mean, it's very fast. It's very competitive, very cutthroat, very aggressive. Obviously, post-COVID, it appreciated like crazy. It's always been a place that we have a lot of international money, so there's no shortage of cash. And you know, South Florida is also very interesting because after COVID, all the northeastern people and Californians came down too. So it was kind of the perfect storm of just prices just kept appreciating. But right now, even still, a lot of people don't talk about it, but the market has cooled off a little bit, right? You know, rates affected things the way that like they did in any market. But it's a very strong market, I would say, in terms of like appreciation. I don't see it slowing down anytime. Florida as a whole is very beneficial for like a landlord, right? Has very strong tenancy laws. The governor, I mean, he's the GOAT, DeSantis. The guy just gets it. Yeah, and I'll say that to anybody. I mean, the guy just gets it. You know, he gets it from a practical perspective of like, if you own the property, you should be able to get rid of a squatter or a tenant, right? That's not paying, et cetera. So I think it's extremely favorable for a lot of reasons.
So, I'm going to ask you a question, but I'm going to rule out two answers. Other than interest rates,
yeah,
right, and other than lack of inventory, what are the two main challenges that you see real estate investors facing?
Other than inventory and interest
rates, yeah, because those are the two layup ones.
Yeah. In our market, like you're talking about wholesalers and flippers and stuff?
Yeah, the people you deal with and interact with in your business.
There's no ingenuity. Towards marketing.
What do you mean by that?
Yeah, so, and again, it's been a hard push for me with the whole reverse flipping thing, and I don't mean to keep coming back to it, but it's
I'm kind of setting it up, but it's because I understand where it came from, and people need to understand this.
Yeah, people need to get creative. In a hyper-competitive market like a Phoenix or a South Florida or Cali or whatever, you need to be creative, and I'm not talking about, oh yeah, I do sub twos, like that's great, right? But to a nail, to a hammer, everything looks like a nail. So everybody's running around the same thing, right? Everybody's doing the same amount of marketing. It's like, oh, you gotta spend more to make more, right? There's 20 dipshits to every deal. So how do you get around that, all right? So for me, back in 2019, I just started buying deeds to properties, and not tax deeds, but straight from sellers. So, when everybody was kind of like zigging, I was zagging, and it made sense to me. South Florida is like a giant red ocean, and it's great. I mean, I've done over 700 deals there. I can compete with the best of them, but it does get to a certain point. I don't know if it's age or tenure or maturity or whatever, or maybe it's just getting your head out of your ass. And I don't know if I can curse on this, but
Yeah, absolutely.
oops, I figured if it's Tim, it's got to fly. But, you know, it just got to the point where I'm like, man, why am I swimming in this red ocean? Like, there's got to be a better way. And, you know, buying the deeds and going after hairy properties and actually solving a problem and being an investor, not just somebody who, you know, again, I love wholesalers. I got no problem with it. But, you know, you're picking up a contract and then you're putting it on, you got the inspection period. I think it's a very archaic model. But a short answer to your question is there's got to be ingenuity. Like, you have to have creativity.
So let's stick on the ingenuity real quick, because I completely agree, right? And throughout my career, there's been times that, we were Donovan Ruffin last night at a meetup.
Yeah.
And I remember the first time somebody called and they're like, oh, I work for Donovan Ruffin. I was like, well, who's that? And they're like, oh, you don't understand. We're equity cash offers. Like, all right, I bought 1,000 houses.
Yeah, the fuck
Go
is that?
away.
Yeah.
But the whole JV wholesaling
Yep.
and remote wholesaling, I thought it was stupid. I thought it would never last because I was stuck in my ways. I wasn't being creative.
Sure.
And then, you know, a couple years go by and you look up and you're like, that was pretty smart.
Yeah.
You know, that wasn't stupid at all.
Yeah.
That's stuck,
Yeah.
right? Adapting technology. When I first started buying houses, I was the yellow pad and paper guy.
No CRM.
Yeah, I mean, CRM didn't exist.
Mapscope.
We barely had the internet, bro. Like,
God, you guys are old.
I had a paper map book that's how you got to houses.
Yeah.
Like, you Mapscope page 49A, block A, C, yeah, there the house is. So, innovation and being adaptable, I think, is a very important thing that investors need to embrace.
Yeah.
As you said, wholesaling is archaic. Maybe tell me a little bit more why you think wholesaling is archaic.
I'll kind of like go deeper on that. It's not that wholesaling's archaic. It's the way that wholesaling's been done and it's being taught is archaic. A lot of the stuff is the same stuff that they've been pushing for 25 years. You know, I don't know if anyone knows, but in 25 years, you know, a lot of shit has changed, right? I mean, look at the latest revolution we've had was novations, right? And again, that's not a new thing. They've been around for 100 years, right? Banks have been doing it for hundreds of years. It's just a replacement of an agreement. That's what it really means. But now it's blown up over the last 3-4 years, right? We were doing novations 3+ years ago. And Eric Brewer's a good friend of mine. He's a stud at it, right? He's been doing it since 2006. But the guys that adapted to it first made a lot of money. And then they were ahead of the curve, which we did, right? The guys that didn't, they sucked wind, right? And again, if you can only, going back to it, if you can only make cash offers on houses, you're gonna have a really fucking tough time.
Yeah.
You just are. And in a competitive market like that, dude, what? Oh, I'll give you 250. Well, this guy said 255. So what are you gonna do? Well, what's your answer to that? Well, 257. Well, he said 260. So what do you do? You know?
62.5, baby.
But yeah, right. But you go up on price. So one of the things, and this is just like a small thing, but one of the things that I started doing years ago to combat that, before we were doing like a lot of deeds and stuff, was just look, I'll do the 255, but I'll go 0-day inspection. Then that's killed like a lot. Like the air sunk out of the room right there, and they're like, "Oh, what do you mean?" I'm like, "No contingency, but we got to sign now."
Yeah.
All right, or you drop your closing timeline. But again, that comes from relationships. One thing that that's ingenuity to a certain extent, because I had private lenders that would fund that in 48 hours. So if I have that lever to pull and that competitive advantage, I'm gonna kick your ass any day of the week, because the seller usually will go with that or a lesser price, because I'm giving them something that you can't, which is time, convenience, and assurity.
You brought up being creative and having the ingenuity. One thing that's brought up, or at least a long time ago, at least, is the real estate is like the wild, wild west. It's like anything flies as long as you can make the deal work or whatever. And I feel because of, I'm not in the trenches like I used to be, I'm more adjacent now.
Yeah.
I'm real estate adjacent. I love to say that. But
It's required on every show.
It's required. But like, people love to think being creative is just creative financing, which is just sub 2. And it's like that, even just saying that is so limited, and it's not creative at all. You're just was it a lemming? Is that what it is, where you just follow the leader? Yeah. And it's like, but you alluded to it, where it's being creative in marketing, being innovative in the deal structure. It's how do you get your financing? How do you do the marketing? And I feel it's lost just because of the words creative financing. because that's just a strategy and that's just one way to do something,
Sure.
people don't realize that it's a so much deeper hallway.
Yeah,
You
I think too, one of the best lessons I learned was, not all money is created equal, because it's not. And what I mean by that is, for example, when we started fixing and flipping, natural progression, right? You're wholesaling, and then now you got a little bit of money, or you got contacts. You're like, oh, I could fix and flip this and make double, right? And it's. I would say that you have to look at it from a different perspective. It's not just because, oh, we can make 30 grand on a wholesale fee, but we can make 60 on a rehab. Yeah, but your cash conversion sucks, right? Now it's 4 or 5 months rather than a 30-day wholesale. So $1 today is worth more than $1 tomorrow, right? You might need that liquidity. What if you get popped by the city? Now you got interest payments. Now you got to carry, right? It's very, very different. Maybe that ARV is not there. Maybe you get smoked by another rehabber that bought better than you, right? So I think that knowing what lever to pull, and I keep going back to that, knowing what to do, and there's so many, you make a lot of money. I used to think that making a lot of money was, oh, we got to grow more and we got to spend more and more marketing and more leads and more people and more deals, and that's how we do it. Well, yeah, but your costs also go up in association with that, because you're spending more now, so now your cost per lead goes up. Now your cost per deal goes up. Now your margin usually goes down. You're not dispoing as well, probably, because now you got to put. You solved the bandwidth issue on the acquisition, but now you created a bandwidth issue on the disposition. So now these guys are probably like, well, we'll just let them fly quick because we just want to get to it, right? And the same, again, you're always fixing, holes in the boat. It's just, I just always say, like, what hole do you want to fix? I'd rather fix a bigger hole than a little teeny tiny hole.
So an interesting thing when you were talking about maybe offer to close quicker or maybe offer no inspection.
Yeah.
Is you're addressing kind of the why of why the customer called you instead of just the price. And one of my first lessons in this industry was what's a lot of money to some people isn't a lot of money to others.
Agreed.
And we tend to start negotiating in $1,000 increments, $5,000 increments, $2,500 or $10,000 increments.
Yep.
And when you start thinking about that, these people, a lot of times on the other side of the table, $500 is a lot of money.
It's a big difference.
Like, what we spend at lunch today is significant in many people's monthly budget.
Sure.
And I want to talk about that because that ingenuity, I think it all starts with kind of the why and understanding why these people are calling you, why these people are in the position they're in, why they need the help. And that, to me, I told you last night, is the most brilliant part of reverse flipping. The way you explain the product, because the product, the offer, is really addressing the market and the why these people need help or why these properties are in that position. So now is the time I want to talk about that, because to me, it's not just finding a strategy, it's understanding that strategy meets the customer's emotional needs, which then makes it highly absorbable by the market.
Yeah. Well, again, and I appreciate that. Like, we are not, I figured out a long time ago, we're not in the real estate business. We're in the people problem solving business. Real estate is the asset and it's the commodity, if you will, that we're dealing with. But that's not the problem that you're solving. So I think where a lot of people make mistakes is, why get you a better price? 9 out of 10 times, these sellers aren't calling you for price. They're calling you because it's embarrassing, which is an empathetic angle. 2, they have no other option because they can't list it because it's got a hole in the roof, for example, right? It's not financeable, right? So all these things. So, and we used to do it too, right? I call it, the king of the dipshits, and Mark Evans always talks about that. But I was the king of the dipshits too. I'm like, well, ask them how old the roof is. I'm like, but they're in foreclosure and they have an auction coming up in a month and a half. Do you think they give a fuck about the roof right now? They don't care. They want to know that auction is going to be stopped, and do they have 30 days in the house, and is the sheriff going to yank them out?
Right.
That's the right conversation, which has nothing to do with price. That has to do with, I can solve your problem. Here's how it's going to look, and you trust me enough because I've given you enough confidence to assure you that I'm going to be the guy that's going to get it done.
Right.
So I think that's very important, and a lot of people miss the boat on that. It makes no sense if we were talking about it, right? It makes no sense that we're picking up houses for $1,000 for the deed, not a contract. $1,000, $2,000, $3,000. But that seller's situation, problem, bad, time in their life is so big that that's where it's come to, right? Maybe the deal doesn't have equity, but you figure it out on the back end, right? Which is really the premise of reverse flipping and why it is.
Listen, this is the first time I've met you, obviously.
Yeah.
But maybe not so obvious to the audience.
Yeah.
One thing is cool and is I've been in this world for a long time. I first got into it 2003-ish, 4-ish with your buddy. we won't go down that rabbit hole. And then I came back into it in 2012 with Tim.
Yeah.
But for you to be able to speak at the level of what you're speaking about, and again, like 6, 7, 8 years, whatever that years, 7 years, is a long time, but it's really not. Yeah. Because there's so many people in this business that have been doing it for 10 years, but they don't have that many at-bats. They don't have that much experience in it.
Yeah.
They're real estate investors, but it's more like a hobby. So I really appreciate having a conversation where it's like, the professionality that you have in it, and then just the knowledge base, it's refreshing.
Thank you.
And again, I understand 7 years is a long time, but it doesn't feel like it is.
Well, one of the things
does that make sense?
Yeah.
Yeah, no, thank you, and I appreciate it.
We talked about it last night too. I was sharing with him that the way Ternus came about was I re-listened to the Start With Why book by Simon Sinek.
I'm actually listening to it right now because of all of it. It comes up at least once a month.
Well, he shared that he re-listened to or reread it again this year as well.
Yeah.
And really what he's talking about these customers and why they're calling you is the core thing that you can learn from that book to learn to focus on as a business owner of any business. Nike. Have you ever seen a Nike commercial where they advertise the price?
Right.
No.
Have you ever seen an Apple commercial where they advertise the price? AT&T will advertise the Apple price, but Apple never advertises the price. Coke, you never see a Coke commercial where it's like, and for 99 cents, you can taste the real thing. No, they tell you this is the real thing.
I agree.
Nike says, just do it. Which is a running shoe company built out of, it's cold and rainy in Seattle and you're a runner, so just do it and wear our shoes.
That's right.
Right? It doesn't say they're the best shoes. It doesn't say they're the most comfortable shoes. It doesn't say here's the price. It says just do it. And Apple, these things, the iPhone 16 just came out and I'm about to buy it. I don't know what they cost.
Yeah.
And I've already decided I'm going to buy it.
Right.
And I know that the one I pick will be the most expensive version of it. It will be whatever they have now, 9 cameras or something on the back, and like
16 Pro,
72 gigabytes or terabytes of
crazy.
something or another. But we do it because it's what we need or emotionally want or we crave. But that's the thing that you just said that's so important. No matter what the listener is selling or what their business is, connect to your customers' needs and desires on an emotional level, on a subconscious level.
Yeah.
Really take the time to understand them, and then you'll make more money than you can handle.
Yeah. Going back to what you said, it's always been very important to me. Even when I got into it almost 8 years ago. Which is not a long time. It feels like a long time. But I'm 33, right? I got into it at 25. I was at Merrill before that, doing something completely different. But I heard a podcast, and it was the first thing I ran at. I cold called the guys. So I always took anyone that knows me. I always took any craft that I do extremely seriously. And I even told my mom when I first got involved, I was like, I don't know how this is going to work, but I'm going to become the fucking best at it. Because I just really meant that, and I still mean it till this day. Like what you said when you're like, I don't know, it's 7 years to talk at this level. Like, dude, I've paid attorneys at this point and CPAs and stuff millions of dollars over the years, mentors and coaching and masterminds that we're part of, right? Like 50 grand a year, 60 grand a year, whatever it is, because I just always wanted to be the best. Not so I do the most amount of deals. No, it's because I can handle and I can teach my team how to handle the most amount of problems. And I can understand it from a granular level. And I wanted to understand, and I don't need to be an expert at everything, but I certainly, and I told my girlfriend today, I was like, I'm not an expert at shit, but I am an expert at finding experts. That's for sure. And I think that's where the best business people that I've ever seen, mentors of mine, 9-figure guys, 10-figure guys, that's where they nailed it.
Well, that's that common, we talk about it, you hear it on podcasts, books all the time of like if you're the smartest guy in the room, you're in the wrong room.
That's for sure. Yeah. And Tim knows that firsthand.
Well,
He's always
He's never felt like the smartest guy.
always.
That's what I'm saying.
Always.
He's the loudest in the room, but
that is very true.
Well, it's like we're in this room right now recording this podcast, and Ryan's team has brought well over $100,000 worth of equipment here to record. And I could afford to write a check for that today.
Yep.
I could afford to get on LinkedIn or whatever and hire a videographer and an audio guy and a publisher and all these other things.
Yeah.
But it doesn't mean I'd be good at it.
Right.
Yeah.
Right? And so I found, thank God, a friend of mine that was good at it and trust him to tell me what to do.
Yep.
I said, you're going to be the co-host. He goes, why? I said, because like you'll keep us from being too serious. You'll make sure that we're relating to the audience.
Yeah.
Because you and I could get so nerdy so quick, half the audience would be like,
Here, go right over.
And I'm just adjacent enough.
Jason enough. I love this word.
So
Yeah, I do
reverse
too,
flipping, Justin Colby calls me about it, and he was last week's guest. And he's like, we're buying deeds. I'm like, okay, right?
Yeah.
I did the same thing he told us that he did with you. Right? I'm just, whatever, yeah, okay, great. We're going to sell a course around it. He's like, yes. I'm like, oh my God. But then he does not explain it anywhere near as good as you do.
I hope not. I hope so because I created it, so I should.
And you and I had spent some time together in Nashville, and that's where I really feel like I first got to know you.
Yeah.
And I started watching your Instagram, and I was like, okay. And then last night when you explained it to me, I was like, damn, that's good.
Thank you.
And I'll do a bad job at explaining it, and then you'll do a good job.
Yeah.
I mean, so you're basically getting with these sellers that are in a tough spot. And most of the wholesalers or wholesale real estate buyers are ignoring them because they may have low equity. And with all these new AI leads that are generated, the machine says, well, don't call that person.
Sure.
Don't send them a letter.
Sure.
Or they may have, just enough stuff on the public record that makes it look like it's not a doable deal. Or the person may come out and say, well, I'll give you 200, but they owe 300, so there's no way. They're like, well, I ain't got 100 grand, so the deal's dead. Well, you're coming in and saying, I hear you say you're done with the house. Just give me the deed and I'll take care of it and I'll try to mitigate your exposure as much as possible. Or they say, I need moving money and I don't know where I can even get a place to stay. I don't have a security deposit. And you say, would $4,000 be enough? Can that help you get where you need to go?
Right.
Yes, great. Sign this deed, $4 grand. Good luck. I will do everything I can to reduce your exposure over here.
Yep.
And then you get a power of attorney and some things that give you the ability to go negotiate maybe some of the debt against the house or some of the other things. And then you go try to basically make the house that no one else could make fit.
Yep.
Either wholesale the property and get some money, or take it down and fix and flip it, or add it to your rental portfolio. Is that the 30,000 foot view?
I mean, you crushed that explanation, so I don't know if I can do better than that.
Because I thought
you crushed.
when you told it to me, because I didn't talk about the surplus thing.
No.
And then you told me you own a lost mint company. I'm just like, this is freaking genius.
Thank you. Yeah. Yeah. So that is it in a nutshell. The other way I could put it is and this is a bold statement because you guys have been in this business a long time, but we are creating inventory. It's basically what we're doing. And it's crazy to say, but we are creating inventory because this is inventory that did not exist prior to our proprietary method, right, and our lost mint company. So we are adding inventory to the market, which we know what's the biggest problem right now.
Which is a public service.
It is a public service.
And let me jump in. And you're creating inventory because these are assets that were owned by banks, or at least being in the maybe not owned by banks,
They're just
but
not
they're in
sellable.
that limbo era where nothing can be done with them.
They're just not sellable. Yeah, it's not like marketable, approachable inventory that you could buy.
It's like in that bureaucratic limbo state.
It's not even
It's that
bureaucratic,
zombie. It's that zombie shadow inventory that everyone refers to.
Okay. There's just no look, and I'll give you kind of like the top 10 if I could rattle them off. But it's basic. So a lot of the stuff starts with, and anyone who's in the business that would watch this, I would say if you have a CRM, I don't care how big it is, just go through your dead leads or your dead deals, right? The ones that didn't work. That's a great place to start. If you're just starting out, I would go after delinquent properties, meaning properties with debt that have inheritance on them, right? So the bigger the problem, the better. And I've always said, I had a mentor teach me this a long time ago, which was the bigger the problem you solve, the more the income you're supposed to make, right? So again, we're not teaching people how to go out and do $10,000 deals. It's not what we do, and it's a JV model with what we do. So we ride with that JV or that partner, community member, because we have a community around it, the whole way, right? And their job is we teach them how to go get the deed in the POA, right, and the assignment of surplus and all that stuff, and we teach them how to identify these properties. We front the money 100% if we need to for the deed or whatever. Then they're done. They submit it. It goes to our back end portal. Our loss mint team does their magic, and then we choose the exit once we've polished up this pile of shit, for lack of a better term. As an investor, and you guys are investors too, what do we want? We want two things. You want control of the deal and the asset. Well, you got that with the deed and the POA right there. And you want the freedom to choose your exit without rush, without, well, you got 3 weeks and that's what we got on the contract, and we got a 5-day inspection period, and we got to get 37 contractors through there that are buyers and shit, right? And now this guy's going to circumvent me and stuff like that. Now you have choice. So like you said, after you've done your reverse flip and we've cleaned it up, then you say, all right, well, does it fit a sub 2 deal? Maybe it does. Maybe it's a 3.5% interest. Maybe you could reinstate the loan for 10 grand. Maybe cash flows $1,000. Who knows? Is it an ovation? There's a lot of clean ones we pick up. They're not just giant pieces of shit. There's a lot of them that, dude, we just picked up, I think, 2 2023 builds today. And those properties are clean money, Lennar homes. The seller's just like, I'm relocating. I can't list this. I'd have to come to closing with 15 grand. I don't have it. Here's 3 grand. Thank you. Go on with your life, right? And we're going to do what we do with it. Maybe we fix and flip it, which is my least favorite because I'm not a flipper. I hate fixing and flipping. It's just not a good, for me, I just don't like it. I've done tons of them, or we wholesale them, which is my personal favorite, printing cash. We can burr them, we can do whatever. You can even use it as a tax play, right? If you accumulate, and that's how I've never paid taxes legally, by the way, Mr. IRS, is you own enough assets. Let's just say it like this. If you bought a deed for $0, which happens all the time, we get a lot of these for free, but if you bought a deed for $0 and it has $300,000 worth of debt, and you're going to keep that over 5 years, let's say, I'm just making this up, or 3 years, you can depreciate the $300,000 worth of debt for the tenure that you've owned it. Like, that can happen any day of the week. And any CPA that tells you can't, fire them, right? 100%. So you're accumulating assets, and as time goes by, equity positions change. Maybe it has more equity. Maybe you give another round at the short sale, let's say, right? Now it's a different BPO. Maybe the market shifts. I mean, I lived it firsthand because I had a bunch of deeds that I bought in 2019, 2020, 2021. Well, what do you think happened by 2022? I had so many properties, man, that had swung up. I think my net worth went up by like $3 million just on those. And I was like, holy shit, I'm so happy I passed. I grabbed these. And the average one, we were buying them for $3K, right? And you can rent them out, and we can get all sophisticated about it. But basically, it's just dead deals. It's dead deals and dead leads that no one else wants to, can, or knows how to work. And that's where we come in, and we show you how to do that. And we don't offer our services as a consultant because we want to JV with you, period. And we've talked about like relationships and stuff like that. I always say this, dude, and it's my favorite quote of all time. I'd rather own 20% of a watermelon than 100% of a grape, right? And in our industry, I see...
That's a great quote.
Yeah.
Thank you.
I've never heard that quote before.
I've heard it said by like 2 of my mentors, and I don't even know where they got it from, but I got to look up who the original author is.
That's great.
Yeah, and in our industry, and I can say it because, again, if it pisses people off, that's fine, but I've lived it, and I've been that dipshit walking around with a handful of grapes, right? And that's the problem with our industry. Nobody wants to collaborate. It's very rare. right? Because they're like, no, I want 100% of the deal.
Well, it's the gorillas. They want to puff the chest out and
Yeah,
walk
dude.
around. Look at me. I got my red bottom shoes.
Private
blah.
equity, listen, the big boys that I talk to and the guys that I actually listen to and follow and be mentored by, similar to you guys, I'm sure, private equity doesn't work that way, bro. Ain't nobody making 100% of shit, right? You make a GP, an LP, you have a pref, you have a promote, you have a waterfall, right? Because why? You're looking to do 10,000 deals a year, not be a dipshit keeping 100% of 30 deals a year, which I've done it in the past, but I find it hilarious. I have a lender that, I won't say his name, but he's a big boy, mentor, lender, and he owns over 85,000 single families, right? And this guy's a big boy. He did it with KKR. And the point is, he told me, he's like, dude, I'll fund everything that you want that makes sense. I love this model. He goes, but I want a piece of the upside. Do you have a problem with that? I was like, absolutely not. You fucking got a blank checkbook. What do you mean? And he's like, you're a smart kid, because that's the problem with your industry. Your industry doesn't connect with my industry because you dipshits are always trying to make 100% of the money. But if I get a piece of the upside, dude, I can go out and do 5,000 deals now a year. You need a lot of capital for that. And would you agree? Like a lot. And you need flexible capital, right? Something that you can't walk into BOA and be like, hey, I'd like to,
Well, I think a lot of that mindset goes and I talk about a lot on this podcast is the fact that there's such a closed-minded bubble atmosphere. It's like there's this echo chamber, and we live in this bubble of, and not even knowing what big is big. Like 85,000 properties. That's a lot. I don't care if it is $100,000 property, which those don't exist. 85,000 times 100,000 is a lot of money.
It's a lot of money.
Right.
It's over a $10 billion portfolio.
Right, but most people in the space, they're so limited on what is a lot and what's.
What's one of the saddest things, and I said that on I think it was another podcast the other day. One of the saddest things, because I've been that guy.
Yeah.
Trust me, I speak this. Ask me how I know. But one of the saddest things you could ever see is a guy or girl in any industry that thinks that they are a shark in the ocean, when in reality they're a little guppy in a fishbowl. And I think that, going back to the king of the dipshits, I've been the guy that's like, oh, I'm the biggest fucking guy, right? Yeah, I'm like, I'm doing 20 deals a month. Dude, I met another guy and this guy's like 20. It's like, dude, we do 20 deals every 3 days. Like, what the fuck did he just say? And that just shifts your perspective. There's two things that can happen to somebody. One, you're gonna go back and crawl back in your little hole, right? Like I did for some years. I was like, no, I'm gonna stick to my thing. I'm cool here, right? Because that's comfort. Or two, you're gonna be like, dude, how the fuck do I get there? Because that's what I want to do, and I want to learn that.
Well, and on that, and I'll let Tim jump in after that. But it's like, you could be the guy that's flipping properties, and then there's going to be another guy that's like, oh, you flip single family, I flip multifamily. Then you have another guy that's like, you flip multifamily, I flip businesses.
Yeah.
And then you have another guy that's like, you flip businesses, I flip countries. I mean, it's always there's always another guy.
Then you got
above
the guys that hold them, and again, that's a whole different strategy. I mean, dude, look, making money's cool. Keeping it is way cooler, especially as you make more. And as you go up through these levels, stages of your journey, what you thought was cool once upon a time, you're like, God, did I really think that was cool? Like the first year, dude, coming into this, I remember like a wholesaling. I was like, if I could make 150 G's a year, I am set. And then you make that. And then I made, all right, it's $250,000. That must be the sweet spot. Then you make $250,000, you're like, nah, it's nothing. All right, $500,000. And then you make the $1 million. And then you figure out, as you're going up there, you're like, holy shit, there's this thing called taxes, and I'm gonna get fucked. Because now I made more money, which nobody taught me. Now the next problem to solve for is, well, how do we keep more of it?
The penalty for making more is paying more of what you made.
Correct. Unless you understand the game, which is how do you play the game? Well, you hold on to shit as you go up, right? And it's interesting. People are like, oh, yeah, you got like millions of dollars in the bank. I'm like, not often. You got millions of dollars in assets, that's for sure. But cash ebbs and flows, right? I don't care though. I keep a lot more cash. And I got friends that make $1 million a year, $2 million a year, but they get smacked up at 35%. I'm making more than that, and I'm getting taxed at like 20 something, maybe, right? But again, it's depreciated on a lot of assets too, right? And then, we were talking about self-directed IRAs and how are you doing that? What kind of vehicles do you how do you do your deals and that structure and stuff. But dude, you need to figure out what game you want to play, because you can play any game, the prizes are not the same.
It was funny. I was at the state fair last week, and
Speaking of prices.
I love the new Bronco, and I was kind of thinking I may want like a smaller kind of fun vehicle.
The Raptor's sick.
The first thing I did was open the door and look at the door tag to see what the gross vehicle weight was.
Yeah, because
It's over 6,000 pounds.
That's it.
I was like,
End of
done.
story. I could buy
And
that.
Jennifer's like, are you kidding me? I was like, no, I mean, it's the thing, you know?
It's free.
But you were talking about private equity, and I've got a lot of experience in that, and it's kind of funny. I've worked with thousands of investors and customers, and I called this mentor of mine. He was one of the founders of several big companies, and I had this fund idea. This was 8 years ago, and my split was like, there was a pref, and I think the split was like 60-40 or something. Well, he laughs at me. He's like, don't ever send anyone anything that's less than a 20% split. I mean, less than an 80% split for the person with all the money. And I was just like, I'm gonna have to pencil that out and figure that out, right?
Yeah.
But, you know, the thing is which you always have to understand is, if you go off of that 80-20 split and you've got a decent pref, which the market rate right now has gone down to 6, and you have a little bit of a track record, you may need zero money in order to achieve what you're hoping to achieve.
Oftentimes.
Yeah. So
Oftentimes.
Raising capital, structuring capital. Well, this year, in 2024, there will be about 25,000 DSCR mortgages originated in America. And there will be somewhere between 300 and 400 brokers that originate those. Mm-hmm. This time next year, those mortgages will be owned by 3 people. There's one guy, or not guy, there's several companies that are rolling those up, and they're the ones making all the money.
Yep.
Because they're doing billions of it, while other people fight to do tens of millions or hundreds of millions.
Yeah.
And so it is fascinating. It's inspiring once you open your mind to that.
Oh yeah.
Because you just start adding a comma and a zero to some things, and all of a sudden it's like, oh, okay.
This is how it really works.
Okay.
Just that easy. Just add a comma.
You also can't, one of the things, and it's hard not to even get emotional about it because I'm so excited about it, because it's my life's work, if you will, like 8 years of it. And like when you see something as clear as I can see that light behind you, that it's on and it's white, and there's no convincing me that fucking light does not exist, right? That's the same way that I see this reverse flip model and, the disruption in the industry and helping both sides, helping the sellers that nobody's clearly fucking helping. Why do I know that? Because I know that for 5 years I've been the only guy there buying the fucking deeds, right? With the exception of maybe 1 or 2 people that have been doing this for 20 plus years, right? Which are my mentors. And then the second side is our space, right? The guys that we hang around with, top to bottom. And you're like, man, like you gotta be doing this. You got to be doing this because this is such a disservice, right? This is why we brought it out there. And there's no course around it, right? We built a school community around it, and we made it, the barrier to entry was just enough so people can get in. It's a recurring model, which we did that on purpose, and it's retention, but it's continuing ed. And that's another big problem that I've seen in our industry. Why do I know this? Because I bought all the courses. I've been through all the masterminds, right? And some are great, some are not. That's life, right? But, not every burger stand becomes a McDonald's. That's life. It's just what it is. But I see a big problem and a big disconnect in our industry is, all right, so you're gonna pay me 20 grand. I'm gonna teach you all the shit that took me 8 years in a 6-module course, right? I'm gonna give you all the docs and be on your merry way. Right, and when that guy runs into the first wall that you ran into 7 years ago, he's gonna have no one to come back to.
Well, you can pay extra for the next part of the course.
Sure, but see, that's such a losing model. Like I never set out to be a coach or a mentor, and I don't perceive myself as that way. I perceive myself as the leader of this community, but an investor first, right? And I don't have a fiduciary duty, but I think in my mind I have a fiduciary duty to the guys and girls that are in my community, where I'm like, it's a disservice to you to teach you this and just let you go on your merry way.
We sat with Gary Harper, and he said something very impactful, which was, information, you shouldn't pay for information, you should pay for implementation.
Nailed it.
And I was just like, can you say that like 3 more times?
Yeah.
Because again, in the real estate space, there's so many gurus, so many people selling all that stuff. It's just like, but how and I uncomfortably held Tim's hand and he freaked out. But it's like, who's there to guide you? And it's that implementation that's way more impactful.
That's why we do a JV model. Like, I don't care. And there's people that come, every now and then, I'd say about 99% of people get it. Once they see the reverse flip model and once they're in the school and they see the amount of stuff, I've had the best, good friends of mine, top gurus. I mean, Colby included, and he's a partner on the school, right? But they've looked at me and they're like, this is a lot of shit that's in here. Like, it's a ridiculous amount of value in all the docs and the trainings and the webinars and this and that. Everything's recorded and 3 weekly phone calls, right? Zooms and all that, and the live Q&As, and my attorney's on these calls. My sales director's on these calls. Justin and I are on another call. Or my partner Adam on the reverse flip side, he's scaled out, multiple 9-figure, 10-figure companies through affiliates and stuff like that. So we're teaching these people how to make their own communities and bring them in, right? So they can JV amongst themselves. It's priceless in that regard, right? But the idea is we don't sell as a service. We will do deals together. And the guys are like, oh man, I had this guy the other day, he hit up one of my team members. They're like, this is a deal in Miami. He's like, I've been doing short sales for 15 years. How did you guys get that property for $218? That was the negotiated value. It was a reverse mortgage. The ARV is $520. When's the last time you heard a short sale be negotiated that low? Anywhere in America.
Not recently.
Right. Like, that's like 2011.
I mean, when you were in middle school, we were doing that. But
I know, man. I know. I get it. You're old. I get it.
You're old.
You're old.
Old or older?
I'm old.
Depends.
Both.
I'm old.
Fucking old. But so the point is, though, and he asked that, and my team's like, well, we own the #1 loss mitigation company in the country. Like, we know what we're doing, and and we have a community for this. And the guy's like, well, look, I just want to pay you $3,000 just to handle the file, and I'm happy to pay you for it. And she was like, well, we don't do that. We only do JVs. We don't sell as a service. You can JV with us, and we'll get you a value similar to that. And the guy was like, oh, what do you think? I'm going to split 50-50 with you? And I'm like, dipshit. And he will go on with his life, and God bless him. I'm not judging, but he will go on and go get shitty values, and he will lose 50, 80K a deal, right? Rather than seeing the watermelon and being like, damn, I could have done 100 deals with those guys, right? So I think in that regard, that's something that I built this community with my intentions and like my mentality, where anyone that's in there, like, dude, I'm not here to do a deal with you. Like, that's bullshit. I'm here to do hundreds of deals with you over the next year or two, right? And I'm also here with the hopes that I change your life, by doing this, which we're already seeing. I mean, there's people that come into the community 2-3 days, they get their first deed. Sometimes 2-3 hours, they get their first deed, right? Because they go back to the sellers that they couldn't help. Now all of a sudden they have a new presentation, like, holy shit. And they come back, and this lady came back today. She's like, I can't believe I just bought a house for $1,000. I'm like, I know, right? It's crazy. She's like, this is fucking wild. I'm like, and you own it now. You have the deed. And
Do you work in Texas?
Oh yeah, we got like 11.
Do you do
right
affiliates?
now. Yeah, we do. It's funny because so that's the other side too. So we thought about this long term too. We get it. We've been in the space too, right? So for community leaders or thought leaders, because I hate the word influencers, we will give you an affiliate link. You can bring your community in. When they do deals, you're gonna have an override, and it's paid out by us. You're gonna have an override off the lifetime amount of deals that person does. And you're also gonna have a small portion of their school community.
I gotta go send an email.
Yeah, and it's unbelievable because the educators, which a lot of them are friends of ours that we've been in these masterminds with, they're like, dude, this is fucking brilliant. I'm like, dude, it's something that you're not teaching to them right now. I'm not competing with you. 2, it's a huge value add to your community. So if you're a real community leader, that's your first and foremost should be, how can I saw something new, boom, right? Why wouldn't you share that? 3, you have access to deal flow. Because you can buy these deals too. You can buy them with us, right? Or you can buy them off of us, or we can buy them. So, or your community member, that JV can buy them. They're open to buy deals from us all the time, right? It's not just like we're making. We can't take all these things down, but they can buy them. There's guys that are getting their first rentals that way.
Right.
But again, it's created inventory. It was not there before.
Well, Kirk Carlton, the founder of New Western Acquisitions,
Yeah.
is a good friend of mine, and we were on a podcast together last year or the year before, and he talked about all of the existing inventory in America that is not in service.
Yep.
Right? It's not housing a family. It's not providing shelter for a renter or a homeowner.
It's a huge amount.
And if you can, I'm not like trying to make you feel like you should run for office or anything, but it is providing a service. Number one, it makes communities safer, and number two, it provides housing. And I think it's one of the things I love about this business is I just feel like we make America better. Like, I mean, I know now investors, the problem is they don't follow rules and laws and then they make us look bad, but ultimately those of us that do it right, we make America better. We make communities safer, we make values more stable, and we give people a quality place to live. So
it's very clear, man. Sorry to interrupt you, but when you drive through a neighborhood and you can ask any neighbor in that house or in that neighborhood, they're like, oh my God, that's a fucking property down the street. It's got a fucking crackhead living in it. It looks like shit. It's freaking dinging my value. My friends come over and they're like, oh, look, that pile of shit is still there, right?
I don't want my kids playing in front of it. Yeah.
And we're the guys that come in and we're like, yup, give me that pile of shit and watch this. And then new house comes in or something better, right? We clean it up and now it's either a rent or top tier renter, or we flip it and hey, we just broke a comp record. Well, you're welcome. Just put still $100,000 in your freaking equity line. Awesome. Go get that HELOC so you can go buy that Hummer. Right? You're welcome.
Yeah.
Right? Like it's just, that's the way. And you drive through the neighborhood now and you're like, yep, that's that pile of shit you don't have to look at anymore. So I think our business is very rewarding from that. Everybody just thinks, oh, these guys just make a lot of money. And we do. And it's America. I don't know what the fuck happened to America. That's what the fuck America was founded on, first of all, right? Not this bullshit that's going on right now, but I digress. But it's the truth.
I could really digress with you.
Yeah,
but
Just not,
dude,
on, not on the podcast.
I'm first generation American, dude. I'll be the first one to see it. Like, I grew up in Venezuela and then I came back. I'm American. I was blessed to be born in this country. This is the greatest fucking country in the world, My mom's also a flipper. I taught her the business, dude, there's nowhere else on the planet that a kid like me, being first generation, would have ever been able to do all these crazy, cool things had it not be for the opportunities that we see here.
I'm very convinced that people that are in America that don't love America or feel like there's a better place out there haven't traveled abroad.
They should go.
Or if they have
Cuba.
traveled abroad, they weren't there long enough to understand. Because I hear people, because I used to live in Dubai, and people talk about how great Dubai is. Great, Dubai is great. But if you're there longer than a week, you're like, oh, that's what slavery looks like.
yeah.
There's so many human rights violations. So, I mean, we can go down the rabbit hole on that, but I 100% agree with you on that.
Congrats on being innovative.
Thank you.
And realizing that it was required for survival.
Yeah.
I wish more entrepreneurs did.
Thank you.
There was a book I read in 2008 called Who Moved My Cheese? And we were at the Home Investors Convention because I was a Home Investors guy, and in 2007 I was #1 in the nation. I flipped 143 houses.
Oh shit.
Which is hard.
Flipped.
Yeah,
Like
flip. Man, I had wrap trucks and full-time project managers.
you went all the way.
I had
All the Kool-Aid.
And in 2009 I had to fire my mom and my brother and take the wraps off the truck by hand in the driveway and get those things sold. It's hard.
But it's real.
And I had to read that book because the cheese had moved, right? And if you just keep going back to the same spot, trying to find that motivated seller, or trying to find that high equity deal, or trying to find that tired landlord, or whatever else somebody teaches out there, if it's not there anymore, and I'm not saying there's some markets, our people, they're doing great, they're crushing it. But if your market, if the cheese has moved and you're not open to adapting your strategy, you are committing to extinction.
I agree with you 100%. One of the things that I didn't even, it was a theory, right? When with Ternus, you had a feeling and you're like, all right, this fucking lending industry sucks and I want to make it better and this should not be this way, right? And it should be, a lending company for investors, by investors, right? Why? Because I walked in your shoes, or in your case, your boots, right?
I wore old man white shoes yesterday.
You did.
That's what you said.
You did. They were the on clouds. It was very comfortable shoes. Yeah. And I love the boot. But, dude, the reality is, I had a theory with the whole reverse flip thing, I'd been doing it for 5 years. I call it Alligato, right? I was figuring it out. I didn't have a loss-make company. I was the guy on the phone with SPS and figuring this shit out, right? But again, it goes back to learning. I learned how, and I implore anybody watching this who's a wholesaler or whatever, please, like, learn your business, learn your industry, and learn how it works. Like, I learned the hard way, and by reading. Riddle me that. Reading teaches people shit. Oh, this is how lending works. Oh, this is how this country's built. Okay, so it's Fannie and it's Freddie. Okay, and there's a couple other ones up top, and then they trickle down. Okay, and then it's about 100 servicers, and then they go down, and then there's FHA, but that falls under HUD, and then there's VA, and then there's USDA. All right, cool. And this is where the commercial loans go, and this is where residential. Where the fuck do all these properties go? Because I remember asking myself that question. Like, that first deed that I bought for $3,000 was in 2019. Oscar Sotelo was the guy's name, and I remember the question that I asked myself internally was, because everybody told me the deal couldn't be done, and it pissed me off, to be honest. I'm very that way. I think you are too, right? I was like, well, fuck you, it can't be done. Like, because, and then the question that I asked was, well, somebody's got to buy this shit. It doesn't just sit here forever. Well, somebody's going to buy this shit, and then you figure it out, and I was like, well, it goes to auction. That's where it goes. But how is a property sitting for 9 years, hasn't gone to auction yet? I started digging and asking questions and calling my attorney, and I was annoying. I'm very annoying and persistent, right? And I'm like, yeah, Gus, but you don't understand. Like, this thing's been sitting there for 9 years. Granted, my attorney's been 25 years, so he went through 07, 08, and he's like, yeah, dude, it's a fucking zombie loan. And I'm like, well, what the fuck is that? Because they didn't teach me that shit in the stupid little course I bought.
You're like, no, I was in the house. There's no zombies.
Yeah, and I'm like, this is bullshit. And he's like, no, man, what that means is that the lender, and this is a huge key, this is ding dong, fucking light bulb went off. And he goes, are the property taxes delinquent? And I was like, as a matter of fact, they are. And he goes, and there's an open mortgage? And I go, there's two. Because you taught me how to look up the civil case search. Again, learn your shit. Don't use PropStream, learn your shit. And he's like, that's a zombie. And I'm like, but why? And he goes, because the lender fell asleep at the wheel. Somebody probably lost that paperwork. And that's why that thing hasn't sold. Because I bet you that HSBC doesn't even fucking know that they own that. And he goes, if you go get the deed, you can file a quiet title. And we'll wipe out that mortgage. And I said, say less. And I ran, and then, fucking $3,000 later, like 90 days later, we did a quiet title. It was true. It was HSBC. They had bought it from BOA. That had bought it from Countrywide. Yeah, which is fucked. And if you learn your history in real estate, you know what the hell I'm talking about. It was a big hole, right? Dude, these guys didn't even appear. We got a release of mortgage in court. 3 times we served them. Nobody answered in Ohio. Service return, poof. $200,000 worth of debt went kapoof. And we made $111,000. From that day forward, I just always asked myself, I was like, why is nobody chasing these things? But it was because it was hard. It was because it wasn't instant gratification. You had to learn something different, right? And that's what we've brought here. And that's why I think in our industry, the theory that I've been able to prove and why it's grown so fast is there's a lot of pain in our industry, right? At more so, not on the lending side, well, on the lending side too, but there's a lot of pain in the wholesale space. A lot of pain. I just got the balls to say it. And again, a lot of people, whatever, they're gonna say what they're gonna say, but I don't care. Like, I have the balls to say it. Like, this industry is in the trasher right now in the sense of a lot of the education that's being put out is the same ticky-tacky shit that used to work in 2013, right? The world has changed. 2, there's a lot of people that won't admit it that aren't making money right now because the cost per deal is too high, the cost per lead is too high. They have teams that they don't know how to run. They don't even know how to fucking track a KPI, let alone a balance sheet or a P&L. But they have been taught to market to the wrong people. That's the theory. It was proved by how many people ran into this shit and said, holy shit, I wish I would have known about this 2 years ago because this is so much better. I made 2 calls to a seller, got a deed. You try doing that on the wholesale side. No way. You will not get a contract after 2 calls. There's no way. No way. They can't ghost you, which is another thing. And now I'm just highlighting the strategy, but they can't ghost you because you own the fucking deed. There's no seller that's going to ghost you because you own the house.
Right.
So there's no ghost to be ghosted.
Right.
You don't need them because you got the POA.
Right.
There's a magic document. So now you can go and negotiate and do whatever it is that you need to do legally and ethically on behalf of that seller. And God forbid it does sell at auction. you got an assignment of surplus. The reality is, dude, you're going after the right person, the right problem, and you're solving it. Therefore, you're gonna get compensated for it. And this is inventory that even the big boys that I know, they're like, dude, I'll buy everything you have because this inventory doesn't exist. The big guys get it right away. They're like, that's fucking new inventory because that didn't exist before. And it didn't. And that's one thing that I kind of like, whoa, this is new inventory. This is kind of trippy. I didn't realize that we were creating. And right now, you know, we're buying about 5 deeds a day. So in 15 states. So it's not a little bit amount of volume. I mean, we're seeing, and I'm not saying that to like impress anyone. I'm just saying that we're seeing a lot of data and we're seeing what's coming in. And by the way, I'll tell you that forbearance is a real fucking problem. And the can that we kicked down the road from 2020, oh, it's a problem. And a lot of people are they are delinquent. And I can tell you firsthand that Fannie Mae, you know, we've had meetings with them and they're a little nervous, right? Because their delinquencies are up. Now that's the shit you won't hear about, right? Because it's shadow inventory, but it's real.
Right.
And it's a problem. You know, bankruptcies, again, some more stats. Bankruptcies are up 34% year over year. Excuse me, 44%. So, and the number one trigger in those bankruptcies, I think we spoke about this last night, but for him, the number one trigger in those bankruptcies is that unsecured debt is over 80% of most of those bankruptcies. What does that mean? People's credit cards have run out, free money has dried up, they can't pay their mortgage on their credit card. Default BK. Where does that go? It's got to go somewhere.
On that point, just because it's relevant.
I know I went on the rant there.
Oh,
sorry.
it's fine, but this is an interesting stat. Since Columbus landed in the Americas, the every single day since, if you take that amount, if the United States existed when Columbus came, and we spent $85,000 a day, yeah, it's 500 years worth of $85,000 a day.
Yeah.
That's one day of the United States spending.
I believe it. It's a staggering amount.
Crazy amount.
It's trillions.
It's just
man.
crazy.
People can't even count that high.
Yeah.
But this is, you know, like Tim, more because you're a data guy, right? Too.
Oh, yeah.
Like, and you get it, dude. This is like we're not talking about, and this is why I'm so excited about this because on a bigger scale, we're solving for a massive X. Right, like this issue. It started off like, oh, yeah, we're gonna do short sales. We're lost mid. It's gonna be cool. We're gonna do like 500 deals a year, and now it's grown, and now it's part of the community and all that stuff. But this is a massive X because Fannie Mae alone. So Fannie Mae owns the most amount of mortgages. Fannie Mae. So 70% of all short sales fail. 70. That's a staggering number. They have a 30% success ratio. All right, that sucks in any industry, right?
Yeah.
It should be backwards. Right? Of that. That represents in Fannie, only Fannie, that represents about 400 to 500 loans per month that are not being serviced. Meaning they're failed short sales, they got to carry it on the books as a negative carry, okay? They cannot recoup the loss. What does that mean yearly? At an average price of $300,000, average loan amount, you'd say that's fair around the nation. That's a 1.5 billion-ish problem annually every year for Fannie. There's 100 other servicers beneath Fannie that have the same fucking problem. So you're talking about a 10 billion plus or minus so negative carry problem that no one's figuring out around the country. That's a lot of inventory.
And folks, you now know why his Instagram handle is Willy Numbers. Dude, I appreciate you guys coming in.
Thank you.
We're gonna wrap up. Reverse flipping, Willy Numbers on Instagram.
Yep.
I found it excitingly interesting.
Thank you.
So thank you.
Thank you. I appreciate
All
it.
right,
having
Thanks
me.
for coming in, man.
Thank you, everybody. We'll see you next week.